Very excited for this conversation. Uh, Michael, Suzanne, Erin, Letitia, thank you so much for being here today. Before we dive in and get really into the meat, let's just go around and start with a round of introductions. Please, will you just tell us who you are, what you do, and one thing that's exciting you now in the sustainability space? Letitia, let's start with you.
Sure. Hi, everyone. Letitia Webster. I am the Chief Sustainability Officer at Goldman Sachs Private Markets. I've been here about 3.5 years. And I also help lead the Horizon Environmental Climate Fund. We invest in environmental and climate solutions that support corporate sustainability goals. One thing that's exciting me right now is actually the scrutiny on sustainability because people are paying attention. Right? Sustainability, the very concept requires, and the entire premise of it really is about changing fundamentally our economy and our financial systems. And of course, that's going to get a lot of pushback, right? And I think for a long time, sustainability was kind of off in the corner. We were doing just little things over here and making things happen, which was good and always, challenging. But now I think we are fundamentally changing the way people think about things, what they have to report on, how they have to speak about it. And it's hard and it's uncomfortable. And I think that means that it's come out of the shadows and into the forefront. So it doesn't make it easier, but I am actually very optimistic that now it's out front and center and we have to wrestle with it.
Fantastic. Thank you so much, Letitia. Erin, we'll popcorn over to you, and then Suzanne, just 60 seconds of who you are, what you do, and one thing that's exciting to you in sustainability.
Sure. Hi, I'm Erin Meezan. I lead sustainability efforts as the CSO for JLL, Jones Lang LaSalle. We're a global real estate services firm. And I mean, I echo what Letitia said, right? For many of us working on sustainability, for me, close to 20 years in corporate sustainability, it's finally here. And we've stopped convincing people that this is the way we need to do business. And instead, every part of our company is now wrestling with how do we embed this? So I think it's a massive opportunity for us to kind of redefine sustainability teams, for us to embed sustainability in business practices. And that's really exciting as a person who's been in the movement and a builder. It's a really exciting time.
Thanks so much, Erin. Go ahead, Suzanne.
Yeah, thanks. Thanks, Jason. Thanks for having us here today. Suzanne DiBianca, Chief Impact Officer at Salesforce. Do not have a background in sustainability, inherited it a few years ago, have been just on a high learning curve. I look after our ESG programs. We also have an impact investment fund, deep dive on climate and also philanthropy and some products and some other things. OG at Salesforce, 24 years. So started when the company was just a little tiny startup. And I think what I'm excited about is AI and the potential that that has around really things like the energy transition and satellite imagery and a number of things. I'm a little worried about it as it relates to energy use. We could talk more about that later, but I think there's ways to mitigate that. But I'm really excited in terms of what AI can do to have us catapult some climate solutions.
Thanks, Suzanne. Michael, over to you.
Thank you, Jason, and thanks for having us today. I'm Michael Kobori, and I'm Chief Sustainability Officer at Starbucks. Been there about 4.5 years, previously 22 years at Levi Strauss & Company. And the thing that is exciting today, and Letitia touched on it, I think sustainability, and I would also include social impact and human rights. It's, having been involved in this work 30 years, we're kind of in the big leagues now. And there are serious issues that are being taken seriously by corporate leadership and in boardrooms. And Letitia just yesterday hosted a group of chief sustainability officers at Goldman Sachs. And I got to tell you, being in the early days of the movement where we were, going to factories and developing countries and checking labor standards and trying to piece together, how do we do industry collaboration? And to sit in a boardroom at Goldman Sachs and to be talking about how we mobilize millions of dollars of private as well as public capital to address these challenges that we've been working on our whole careers is extraordinarily exciting.
Thanks, Michael. Let's go deeper into that and start the discussion. And we'll come back to you and have you continue that train of thought, because we're going to talk a lot today about building an effective sustainability strategy. And that, of course, requires having a shared understanding of the moment we're in. And you've been doing this work for a while, as you mentioned, 30 years in sustainability. What's particularly unique and important for sustainability leaders to know about the landscape today and where you think it might be heading next?
Well, Jason, in addition to us kind of now being in the big leagues and these being serious issues that are taken seriously, probably the most significant change that I've seen in my career is happening right now. And that is the shift that we're all experiencing from sustainability, human rights, social impact being voluntary initiatives that companies undertook, really in a very aspirational way, to this whole space being much more heavily regulated. We're seeing it coming from Europe. We're seeing it in California. We're seeing it come out of the SEC, even though that's on pause. But the regulations are happening more and more. And one of the things we're certainly seeing is, in some ways, it is forcing leadership and boards to think much more about the risk in terms of taking on too much or being too aspirational. We have to really demonstrate everything that we're doing and how we're doing it and how we're getting there. And there's also legal risk that's coming into this, as we are all are experiencing. So I think there's that happening that is really shifting the landscape and the operating environment. And one of the things that I'm concerned about is, as regulation comes to us and we have to deal with it, that we are going to lose some of the aspirational nature of the work that we all came to do. And that is going to have an impact on how we relate to our employees and our customers, our investors, and others. So there's that balance and that tension, I think, in the current environment.
Thanks, Michael. Letitia, I'd love to turn to you. You've led sustainability programs in apparel and now finance, two pretty distinct industries. And in your role at Goldman Sachs, you're looking across industries. So I'd be really curious how you build on Michael's assessment of this particular moment. And also, are you concerned that many companies are not currently on track to meet their targets? And what implications does that have for leaders coming into and creating sustainability strategies?
Sure. Well, let me hit that last part first in terms of companies not hitting their targets. I guess having set targets and having gone through this process many, many times, back at North Face days and then VF days, there was a mindset that we wanted to set aspirational, ambitious, hairy, audacious goals, right? There was that whole 100% of our power will be sourced by renewables, 100% responsible sourcing of cotton or palm oil or whatever it might be. Because people wanted something big. They wanted something to go towards, right? They wanted a call to action. And the thought was, we may not get to 100%, but we may get to 70 or 80. But if we really went back and kind of laid out actually how we're going to do it, we might only get to 20, right? And so there was this thinking in the industry of push it a little bit. We may not get exactly where we want to go, but we're probably going to get a lot further than what we would have gotten if we just had really been super analytical about A, B, C. Now, with that said, I think that's becoming, people are kind of scrutinizing this and saying, wait a minute, you made these commitments and you're not quite there yet. I think a couple things have happened, though, that we have to understand is one, let's not forget COVID. We just went through a crazy time period, right, where everyone wasn't quite sure what was going to happen in the economy. We just went through massive inflation. So the cost of actually embedding new solutions into our companies rose significantly. There's been an incredible threat of recession, right? And so I think there's been a little bit of wait, let's hold on to some of our capital. Let's just wait a second with CEOs and executives before we just start, going willy-nilly and starting to invest in too much. So I think there's been some of those macro things that have happened as well. I also think what's happened too is companies in the background have been doing a lot. Let's not forget, corporations have been really in the back, rooms, really trying to do a lot of work. And I think we've hit a lot of low-hanging fruit. right? And so I think this next phase a little bit is some of the more hairy, really difficult, broad ecosystems, supply chain scope 3 types of projects. And that takes a huge amount of collaboration with your suppliers, with your sector, a lot of partnerships. It's not always really clear how you're going to get there. So I think that's part of the problem, is it's kind of this amalgamation of a lot of different challenges that are coming to bear. So my heart goes out to a lot of the corporates, because I've been in those seats, and trying to figure out how we're going to meet these goals. But I think, in terms of your first question around, going from apparel and outdoor industry and footwear into finance, I would say, as people think about building a strategy, it's really almost, the same kind of approach, with universal concepts, right? And Michael hit a little bit on this. Is one, there's risk mitigation, right? And so at the North Face, we looked at, back in 2004, we looked at risk mitigation in our supply chain, because what we are marketing, these big epic landscapes, was not what was happening in the supply chain for anyone. The water issues, the dye, the chemicals, the human rights, massive issue. And we knew we had a major brand reputational issue. And so we had to address that. When I got to VF, it was about optimization of resources, right? And so reducing waste, engaging employees. Now at Goldman, we're really thinking about innovation and how do we actually help our clients take advantage of these tailwinds in sustainability to realize their investing goals. And so we're really investing in a lot of these new entrepreneurs, new products who are coming to market where we can see alpha and we can deliver our clients a really innovative product. And so I think it's really looking at your business model and understanding specifically what's most important to your business, and leaning into that and making sure it supports your business strategy, it supports your leadership, and it really drives your business goals. And so leadership and the board and then your investors can see the value that is brought to bear through that sustainability program. And so I think that's really the thing that on my mindset that I've always had. Lastly, I'll say, is back at North Face days, I remember our CFO, really early days, and he just constantly said, there is no sustainability without a sustainable business model. And that has rung true from day one, is that we have to make sure, no matter what, we have sustainable business models to deliver on all those financial aspects. And I think sustainability can help do that. And so just keeping that in mind as you build a strategy is probably one of the most important things.
Thanks, Letitia. Erin, I think that's a great segue to you, because integrating sustainability across the business is needed, to Letitia's point, to have a sustainable business model. And that's something that you've been working deeply on in your work at JLL. Please tell us, how is it going? What have you been learning about integrating sustainability across your business?
We're really taking advantage of this moment in time where it's important to the board, it's top of mind for the leadership team, our clients and investors are asking us about it, and we're taking that opportunity to sort of shift away from this idea that it's a sustainability team that delivers this on behalf of the entity and really embed this. So, purposefully having conversations with our finance organization about their role in helping us deliver robust, credible, verifiable ESG data, and taking the opportunity to build new, not just bridges and collaboration, but positions like an ESG controller. And, so I think that's one really tangible example of how do you start embedding it across function. Another is working to put in place those systems and collaboration points. We've created something called an ESG Center of Excellence. And it's where we're bringing together all the functions that have a hand in not just generating this data, but increasingly have a new ownership or responsibility for shepherding that's not within the sustainability organization. It might be in finance, might be in legal, and really putting those kind of systems or centers in place to help embed this elsewhere. I think the third is we have this new recognition that sustainability is everyone's job, or everyone owns a piece of it, versus the old traditional model of it being a group of people on the corporate team who try to drive it. So another example would be working with our procurement organization to really build new roles and new responsibilities there that are fully driving, let's say, decarbonization of our supply chain within that function. And I think in my organization and many others, that's relatively new. You know, we've been in a first iteration model of saying there's a group of subject matter experts that sit in the center on the sustainability team and doing this. And we're really flipping that script and saying, actually, let's be strategic about additional functions, additional roles and responsibilities, where we can embed this, where we can put those operating models and collaboration points to really make it stick. And I'm excited about what that also means for the sustainability team, which is a liberation from a lot of the administrative data communication efforts back to, you know, being what many of us did in the early days, which Michael and Letitia have talked on, being the innovators, being the ones who create the new models. And so I think that's a really exciting opportunity for every sustainability organization.
Thanks, Erin. I'd never thought I'd hear the word controller so much as I have over the last year. And not just that, it brings so much delight to sustainability leaders when they mention, big surprise that that word just brings so much happiness. But thank you. Really insightful. Suzanne, let's turn to you. Salesforce is consistently regarded as a true leader on climate. You achieved 100% reliance on renewables in 2021 and currently have net zero residual emissions, meaning you purchase carbon credits equivalent to Salesforce's residual scope 1, 2, and 3 emissions. I know that in developing your sustainability strategy, you centered on 3 questions: what your company does, how you do it, and lastly, who you influence. And it's that last one that I'm really curious about and would like to dive into. What have you been learning about effectively exerting influence? Something that many companies need to do now more than ever.
Thanks, Jason. A lot of what the other panelists said kind of resonated with me about the state of the world, this kind of liberation for sustainability executives, and the fact that it's moving outside of a small team into the whole organization. So I think that's part of the influence. I guess maybe I'll start there. So if I think about influence, really it's 4 areas. One is with our employee base. And to sort of start there, I think that, you know, making sure that it's sort of owned throughout the company. We also hired an ESG controller this year, but we've got marketing that have sustainability goals. Finance does. Our sales team right now is actually working on reducing their travel emissions. So the responsibility and therefore influence is sort of within the 70,000 people of Salesforce, which I think is super powerful. And you know, we've done things in the pandemic like sustainability at home guides and shared them with like sort of a ton of other people. And so those 70,000 people also sort of have a ripple effect on their own communities and how they think about sustainability. We've got Earth Force that has 25% of our company as members. And so it's pretty powerful, just the mothership called Salesforce of the 70,000 plus their networks, right? That's one way that I think we're privileged to provide influence. Second is really through all of you. I mean, it's through peers, right? So like an example is advanced market buying commitments. This is something that we can all come together and do. You talked about our carbon offset program. Those have been, you know, highly criticized and scrutinized, but we believe that we must invest both in new technology. So, you know, we joined Frontier, which is really CDR based. Last week, we announced Symbiosis with Google and Meta, which is nature-based. And so these are advanced, you know, buying commitments, making a signal to the market that, you know, we'll pay up to, you know, $100 million in both of those cases to purchase to drive both innovation, but also preserve biodiversity. The other thing is 1t.org. You know, we've got now 100 other companies that have joined us in this effort to try to conserve, restore, and grow 1 trillion trees across the planet. It's obviously a massively big stretch goal, but we have to sort of shoot big and we have to do it together. So that's our influence, I think, as a corporate sector. And, you know, Pledge 1%, Jason, which you know, which is a now got, you know, I think 20,000 members that takes both giving back and volunteering and product donations sort of very seriously. The third category is policy. I was on the call this morning with my colleague Kate from Google. I really respect the work they do in partnership with GA. We tend to align a lot with big tech. Lisa Jackson, my friend at Apple, has, you know, both government relations and sustainability under her remit. So I think policy is a really important lever. We just announced our AI policy principles from a sustainability perspective. We have our climate policy principles. And in our areas of focus, which is nature and energy transition and net zero, we lobby in those areas. We lobbied hard on disclosure so that we could all be liberated. And then the last is really our customer and our network. So we're trying to figure out ways to embed tools into our products that influences our customers, both consciousness around sustainability, but also use of technology tools. So you can see in Salesforce, how many reports that you run, and can you run those reports on a less often basis, so use less compute power. So you get like a score, kind of a sustainability score within your product usage. And if you click into that score, you can look at ways to sort of be more efficient in your use of technology. So those are the sort of 4 components we think about influence.
Thanks so much, Suzanne. Of course, there's also a lot of influence in finance and what gets funded and how it gets funded. Letitia, we haven't yet talked much about sustainable finance. And at Goldman, you have a front row seat to the role of capital markets in driving innovation and impact in climate work. How should other leaders be thinking about the role of sustainable finance in their strategies? And what have you seen work well, and where can things go wrong?
Sure. Well, we'll take it, I think, from two parts. Well, a couple stepping back. The way that Goldman thinks about sustainable finance is really 2 elements. There's the climate transition and inclusive growth. So we believe in both coming together to really kind of change finance and really support kind of sustainable development, sustainable growth, sustainable businesses, market economy. When you kind of then, the next level is really thinking about the public markets and private markets. So within public markets, obviously, it's these companies here, Salesforce and JLL and Starbucks and others that are part of the public market. And public analysts are really looking at these companies to understand how their sustainability strategy is being integrated into their business and how is it impacting it. Is it having a positive effect or a negative effect? Actually, some interesting research that's been coming out from our team on our global research team is that actually ESG leaders, people who score high on different scorecards and dashboards, be it on MSCI or Sustainalytics or some of our own proprietary Goldman Sachs scorecards, are outperforming ESG laggards within their sector by up to 200 to 300 basis points. And that's pretty significant. And so I think investors are now really seeing it as something that they want to underwrite. They want to understand, what are publicly held companies doing around sustainability? Do they actually have a plan? Or are they just kind of little smoke and mirrors and they're kind of just dabbling in it? They want clarity of focus. They want to understand where their revenue is going to be coming from. They want to understand how they're investing their capital in this. They want to understand how they're adopting this. How is it becoming a commercial forward strategy? Because they believe it's actually an indicator for alpha. And so we're starting to see it from that element, and or it's an indicator that if they're not managing it properly, there's potential risk there. If they're not managing their supply chain, responsible sourcing, that there's a potential risk there that could impact that value. On the private side, interesting enough, coming from a publicly held company, I was actually a little surprised when I joined private markets that private markets have flown under the radar. A lot of these companies just, they're smaller. They tend to be smaller, much less scrutiny. And we have to educate, actually, the private companies on what is ESG, what does sustainability mean, corporate responsibility, all of that. And we've had to actually go in and actually help them build the tools and the resources to collect the data, to actually even understand how you report, what's materiality and stakeholder engagement, all that stuff that public companies have been doing for practically decades. But we also go in and now we collect that data, we hold the hands of these private companies, and we underwrite to it as well. And what we're starting to do with the private companies is saying, okay, this is the entry point for private companies. A lot of times it's pretty early. So in the maturity scale, it's down in the 1s out of a 5 maybe. But then we build those capabilities up to maybe 2, 3, 4 for exit. And we track that. And now we're actually starting to see at exit or an IPO, there's real value attached to sustainability, and we're able to start articulating that. And so we're really working with these companies to help them lean in and help them understand the importance of it. So that's kind of across the board too. I mean, that's across all different funds. It doesn't have to be a sustainability fund or an impact fund or sustainability focused company. It's kind of across the board. We want to start seeing this overall. And then I think the other thing in finance that's happening is people are building sustainability oriented products or impact products where you're starting to bring in a cohort of companies that are like-minded, that might have net zero pathways or SBTI goals, or or companies that are climate solutions, right? And you're starting to build this cohort of funds together that potentially will perform better. And it's helping our clients. So our big clients, like our big pension funds and LPs, they want to take advantage of that because they actually think there's a macro tailwind that's going to support growth of those companies. And so they want to start investing more of their capital in sustainable product, sustainable financial products. And so there's a number of different, I think, avenues that our investors are taking, everything from just integrating sustainability across the spectrum of companies to really starting to think about very deep thematic products where we think there's real tailwinds to take advantage of. And I would say the last thing maybe is, and I think this is kind of something that's been woven in, is the regulation. I've always heard that the finance industry was heavily regulated. Now sitting inside of it, it is true the finance industry is heavily regulated, and now we're even adding more regulation with the ESG regs from around the world, and it's pretty intense to be able to navigate that. And I will say one thing that I'm concerned about is that so much regulation is, and I think Michael, maybe you mentioned it, or Erin or something, that I think it is really taking a lot of the innovation out, the inspiration out. And I think, frankly, it's becoming to a point where we're really just focusing our teams on reporting and collecting data and reporting data versus actually doing sometimes the real work to add the value. And I think that's where there's going to be a risk of making sure that we're not adding complexity, adding cost, but we're not actually able to lean in and do the work that's truly adding that, top line value creation. And so I think that's just something we have to be thinking about as we move forward, but very much embedded into the finance world. It's pretty exciting to see that the finance, the banks, the private equity firms are competing on this now. It's really becoming a competitive differentiation to go and get client capital, is how sustainable are you? And so I think that's a really exciting point in time.
Letitia, thanks so much. And I think it's important to remember, yes, there needs to be ongoing innovation, and there actually can be innovation in how we use finance. And Suzanne, I'd love to bring you into this point. Salesforce recently published the Climate Finance Playbook, a guide to helping companies leverage a diverse capital stack to advance climate goals. And it's based on your team's experience using philanthropy, venture capital, and other financial levers to back your sustainability goals. Can you tell us a bit about the finance playbook and what lessons you've learned about deploying different forms of capital that other sustainability leaders really should be thinking about?
Sure, and I'd love, Letitia, to get that data from you. It's interesting because I worry a little. We recently met with our foundation financial advisors, and they had said performance was down because the ESG stocks were off. So it was interesting, and that made me nervous. So maybe we're not investing in the right things, and I'd love to have an offline conversation with you about that. In terms of, climate finance, I'll just keep it short, Jason. I know you want to, there's been some time for Q&A also, and hear from others, but you can obviously go check out the playbook in more detail, but it just says, be creative on your balance sheet to see how you can drive impact. So philanthropy, you mentioned, we do a lot of work there, and climate justice, ventures, we're looking at a lot of deals in the energy transition space in particular. And then we bought Slack. When we bought the company Slack, we bought it with a green bond, which enabled us to invest in some core products, which is like net zero cloud, which is an important product for us, sort of helping us to get all of our customers to net zero. And so we, use the green bond facility to sort of manage, help fuel that investment. We're looking at tax equity right now. We're just trying to get sort of creative on win-win situations that we can sort of use different parts of the company's asset base and balance sheet to drive change, but also in many cases to drive down cost too. And that's a really cool, part of it as you think about, you reduce energy, you reduce cost. So that's how we think about finance.
That's great. And we can include a link to the playbook that's available online
Yeah.
when we send out a follow-up email to all the registered
People
participants.
much smarter than me worked on it.
It's a great
Good
report.
idea for
And
finance people. Yeah.
fantastic. Another area where we gain influence and are able to accelerate progress is through the use of data. And Erin, I'd love to turn to you with this one. Data, of course, provides the basis for our strategies, our goal setting, decision making, reporting, but also our storytelling. And that storytelling is often really important for gaining and maintaining influence internally and externally. But getting good data and using that data remains a challenge, and often one that's fragmented across an organization. How are you working to address that challenge? And what guidance would you offer other leaders that are keen to level up their use of data, their data collection, management, and usage for sustainability?
This is something we've spent a lot of time on, and I know everyone is spending a lot of time on, right? Which is an across the board data quality improvement. But I would say just start from keeping that future state in mind of we want good data to what end? And the primary to me is for making better strategic decisions, right? To project ESG performance, to understand and really map out those roadmaps, whether it's to decarbonize or to improve representation, whatever that is, like keep that top of mind, but recognize we all secondarily have this other objective, which is the need for more credible, robust, auditable data for reporting. And I think what we're finding is that if we map out what are the key strategies to deliver, in many instances, you're going to make investments that deliver both, right? So we've been really focused on things like how do we add more controls and transparent processes in the business to have consistent data? We've looked at increasing the verification, the robustness of our verification process, right? We've looked at technology and its role in kind of making data more auditable, faster to gather, and more transparent. And I would say a couple tips and tricks that we found really useful over the last 12 months, and I've deployed every single one of these, but I did a third-party data quality assessment. I really felt like there were some hidden assumptions in how we had conventionally done things. And in an organization our size, we're sometimes rolling up data streams in excess of 30 different spots as our primary ESG data sources. So one of the first things that I asked our team to do was a data mapping exercise to go to the ESG report and trace every number all the way back to where it originated. And it was a real eye-opener to understand how many hands that touched, the lack of digitization, and the inconsistent controls and processes. Then we actually engaged our internal audit function, that traditionally has been focused on looking at those high-risk areas, and they did an audit of our ESG report. And I found it really useful to compare those results to the third-party assessment because this is an organization, a part of the organization that theoretically is independent and functions independently, but really knows the organization well. So it was a really interesting contrast to say, let's do a couple internal exercises. Let's trace that data back to its origin. Let's really look at our processes and our complexity. Let's use our internal resources like internal audit. Let's engage a third-party data quality assessment. And then ultimately this year we did a full third-party ESG data audit at a much higher level of robustness. And all of those things, ironically, what's great is by deploying several strategies, you start to see the three biggest issues that crop up, but it also gives us a really complete picture of what are the big gaps and what do we need to invest in. Lots of work still to do.
Thanks so much, Erin. Michael, let's turn back to you. Sustainability leaders often harness investor, employee, and customer interest in climate change to really build their case internally and maintain strong momentum. I'm curious, what have you learned about funneling those stakeholders' interest in sustainability into corporate action?
Well, Jason, I would say that, those stakeholders that you mentioned are traditionally the ones that we talk about when we're making the business case and we're trying to engage folks in really accelerating things. One of the things that we in particular have learned at Starbucks is our baristas. We have 400,000 store employees around the world. And if you think about it, they're Gen Z. They're 17, 18 years old most of the time when they start being baristas. And what we found through all of our research or surveys or engagement surveys and so forth, they want agency. They want to know that what they're coming to work to do every day has a positive impact on society and on the planet. And so what we're looking for is how do we make sure that in their daily jobs, at the end of the day, the leftover food, they can bag up in every store in North America, and it goes to our food share program. It goes to local food banks, as an example, right? One of the things I'm really excited about is last month, we issued a personal reusable cup. So I personalized mine with stickers. We gave everybody stickers. They can personalize it. They can put their name on it. Every barista got one of these, and every new barista is going to get their green apron and one of these when they start. And if everybody uses this for their shift beverages, right? When they're on shift, they get free beverages. If everybody uses this, we will save 300 million cups a year. So it's that kind of agency that we're giving folks that really makes a huge difference, obviously for their engagement and also retention. And it's just a huge business driver for us. And I wanted, given the audience that's with us today, I also wanted to underscore some things that my colleagues have said. Erin, your focus on data, not for reporting's sake, we got to do it for that, but of course, for measuring our impacts and the progress that we're making and figuring out where we need to focus, right? And getting to a quarterly real-time assessment of where we are, the progress that we made, where we need to make more progress, I think is huge. And AI and automation is going to help with that tremendously. Suzanne, you mentioned finance and how we can creatively use finance, because for those who are watching today, I'm sure you're all realizing your G&A budget is pretty restricted right now. We're going through that part of the business cycle. But how do you use tax equity investments? How do you talk to finance? Tax equity investments. Unlock your balance sheet. We've been able to unlock our balance sheet with our treasurer. And guess what? Almost $100 million a year we're able to invest in circular economy infrastructure, in water access, sanitation, and hygiene projects around the world with other companies and with public sector finance. I mean, these are big, significant numbers that generate big, significant impacts. And so, make friends with your finance team, with your controller, with your treasurer. Letitia and I were talking about this with other colleagues yesterday, right? Finance is the key to really unlocking sustainability, impact, and progress in the future. And the last thing I wanted to mention, Erin, you talked about integration. So critical, right? My big lesson after Lee was when I came to Starbucks, we got to embed this. I only have 14 people on my team at corporate, right? Because we have sustainability teams in product and packaging, doing the reusable cups. We have them in store development, doing our Greener Stores program. We have them in supply chain. We have them in every business unit. Last November, we had our first Global Sustainability Summit. Almost 100 people from all around the world in Starbucks who are doing sustainability, right? And that was really powerful. So how do you really embed? So you're creating this group of people. And by the way, I give them all the jackets too. They love that, right? And so they become this force to drive the changes that we're seeking in the company.
I don't know about you, but I love the image of an army of folks wearing Michael Kobori's signature denim jacket, driving sustainability at Starbucks. Fun to imagine. Thank you for sharing, Michael. Okay, so now we enter a fun sort of less scripted part. Excited to be able to start surfacing some questions that were submitted by members and those registering for the event. And let's start with one that I'll consider to be sort of a softball and try to make them a little bit more challenging as we go forward. For anyone that wants to answer this one, what advice can you offer other sustainability leaders in terms of engaging your board and executive team in developing your sustainability strategy? What advice do you have in terms of establishing governance?
I mean, I could just jump on this. I talked about it a little bit earlier, another event, which is comp is a good level to get it in front of the board. So we often present to NomGov or audit on our sort of emissions data. But when you can get to the comp committee as well and put it in your executive comp, it's just a good way to get boards to engage. In fact, our board this year kind of pushed back and said, instead of just EVPs, it should be all of SVPs, which is another, 1,000 people. So it's great. So the board's pushing us in a positive way. And, as a result now of this different committee structure, we've got a lot more engagement and buy-ins. That's just one example.
Great.
Yeah,
Sorry, go ahead.
Yeah, I build on Suzanne's comment and say the other thing that we can do is, because the issues have become so cross-cutting, right, for the board committees, right? You've got audit committee involved, you've got comp committee involved. Starbucks just set up a, environment partner community impact committee. I sit on the board of a public company, Bunge, which is a big agricultural company. And there is so much cross-cutting work that happens around sustainability across the different committees. The management team, it's really important for the management team to be coordinated and to help those committees make those cross-cutting connections so it comes to the board as a unified whole. Right, so they can make sense of it because we are making sense of it as well. That's a really important aspect of how the management team should be presenting and sharing out sustainability work to the board.
Great. Thanks, Michael. Another question from our registrants. What do you see as driving your peers to push the envelope and develop stronger sustainability strategies in the current landscape?
I think it's differentiation, right? I mean, I think, like Michael alluded to, I think this younger generation is caring about it. They're really starting to take it seriously. I mean, there's, it ebbs and flows. So sometimes you see them with fast fashion, and it's like, oh, maybe not as much. But I think overall, people are expecting it. It's becoming kind of that social license to operate. And I think they're trying to differentiate. I think you have to be careful about greenwashing, of course, within that. But I do think it's around, how do I get out with a unique point of view around sustainability and speak to my customers or clients about it with a unique offering. I think especially sometimes mature companies, mature sectors, it's only so much innovation until you have to really start looking at other things. I mean, we saw that in apparel and footwear, right? There's only so much innovation you can have with jeans, right? And so you have to start thinking about, okay, like, I mean, Michael knows this better than anyone, like waterless jeans, or, the dyeing process and, reducing the carbon footprint of that jean or that shoe or what have you. And so I think it's really just about trying to get out in front and engage those customers in a unique, differentiated way.
That's great. Thanks, Letitia. We'll keep moving, and you can tell that these questions are definitely coming from practitioners, other sustainability leaders. That's to say, the nerdiness is impressive. This one, I would love to hear how impact frameworks have been designed and implemented that bridge between social and environmental impact. So impact frameworks that are implemented, bridging social and environmental impact.
This is a really important thing that I have a lot of passion for, Jason, as we've talked about. One of the things that happened when I first joined Starbucks is that I was getting briefings by different teams, and I got a briefing by our team that works on renewable energy. And so we're moving from RECs to investing in renewable power generation. And so the team looks at all these different investments, tax equity investments, and they decide on, oh, let's invest here. And I asked them the question. I said, well, how do we decide where to invest? And they said, well, we get a tax break in that location, or there's a lot of stores there, or all these financial and business criteria. And then I said, well, do we ever decide on the basis of what is the population in that community, and are they underserved population? Have they had access to renewable power before, and so forth? And they said, well, no, we really don't look at that. And I said, well, could we? And they said, sure, we could. And so they went out and did their homework, and they went and got the EPA figures, the data. And then they came back the next proposal, and they said, oh, we factored this in. And so now all of those renewable energy investment decisions are directed at underserved communities. We made last year a $93 million investment in community solar in upstate New York that brought power to 24,000 households who didn't have access to renewable energy before. And we worked with the state of New York and got a subsidy. And so renewable energy was cheaper for them than the old fossil fuel-based energy. So we're building it into the process, which is kind of what you have to do, right? You have to build it into the way you operate the business. And I think for us in our roles, it's sometimes just asking those leading questions, or not so innocent questions that are directed at how do we get to that particular issue of the intersectionality of environment and social impact.
And I think Michael's point, really underscores a little bit of what is visible, particularly if you're coming into a new organization. In many instances, don't forget how some of these goals and targets were set years ago were not using that impact lens. It was set from the perspective of, we have a risk we have to address. We have this kind of opportunity area that we have to think about, and just merely asking the question of, we've set these goals and targets, here's what we're measuring, but what would be our ideal impact? And then asking, have we even set the right goal? I think is a really good analysis to look at your existing targets in your organization and really almost do an impact assessment. Another opportunity is do a social impact assessment, do a proper analysis of where you think the biggest risks and impacts are, and then design pursuant to solving those, not kind of the way targets have been set in the past, right? Which is, we've identified a risk area, we have to do something about it.
Yeah, I guess maybe the only thing I'll add is I agree deeply with what Michael and Erin said in terms of how to think about it. And if you just think about climate and society, they're not distinct. They're one and the same. So when we think about our grants programs, for example, we think about it through an equity lens. We've got a big trees goal. I talked about 1 trillion trees. We actually focus those in urban areas where there is, in some cases, where there has been a direct correlation between health problems and nature cover. If you take any map of any city around the world, doesn't matter what country you live in, and you look at tree density, you can see the poor population straight away because they always have the lowest nature density. So really looking and investing in programs like that brings some visualization to those issues, and then really working at a community level to sort of think about, what's the impact of nature on people, and vice versa. So I think it's all interlinked.
Fantastic. Let's do one final question before we go to a final lightning round where we'll ask each of you for calls to action for our audience. This last question is, how can economic growth be decoupled from natural resource depletion? What role are your companies playing to incentivize this approach? Told you we're going to get more challenging for the final questions. But I think Letitia, you already started talking a bit about water usage, and I'm sure from your experience in the apparel industry, you saw a lot of effort towards a circular economy.
Yeah, that's where I was going to go. You're right, and I think this is a lot around, consumption, right, and consumption of goods. And so when I was at VF, we really started leaning into kind of circular business models, and for a number of different reasons. One was we were recognizing with the consumer, it was a very transactional relationship, which was very costly. So one of it was, how do we, I mean, actually, Erin, you need to be talking about this with interface, because as we started looking at circular business models, I would constantly be bringing up interface, is this idea of you creating this, not only a relationship with your consumer, right, that had more value to it, but also the relationship with your materials. And it was dead on with, the start of interface and what we did. But that, I think, is really kind of coming into its own, as starting to think about how do you elongate that relationship with the materials and start to actually create value from it. So for instance, one of our investments actually at Goldman Sachs is with redwood materials, which actually JB Straubel, who was one of the founders of Tesla, started a number of years ago. And it's about recycling batteries for the industry. And so we're starting to see in some of these industries that we have to be able to secure these resources, especially these really high value resources, insource them in the United States, because they're absolutely critical to our industries, and we need to be able to do it in a way that's cost affordable. And so we're starting to invest in those companies as well, just because we understand kind of the resource constraints and the need to onshore those as well. And so that's another piece of kind of how we're thinking about it, is how do you invest in those, because we know those are going to be the industries of the future.
Thanks so much, Letitia. Just 4 minutes left. NationSwell events often wrap up with a call to action for folks in the audience, and we'd love to leave everyone with something actionable. Suzanne, why don't we start with you and go to Erin, then Letitia and Michael.
I think, having a clear climate action, climate transition plan is really important. We're deep in that effort right now, but it really enables you to engage the stakeholders throughout your companies in a significant way that gives them accountability. So, start with a climate action plan. Climate transition is a little bit more detailed, distinct, sort of just depending on your size of the organization. And the second thing is just stay focused. Like if we try to do everything, we will do nothing. Like we don't know anything about stores like Michael does, but we know a lot about software. So if you want to, as we think about sustainability, we think about data, we think about AI, we think about digital transformation. We need to stay in our lane because that's our superpower. That's what we know about, and that's how we think we can drive change. So, a sort of critical area of focus. And to Michael's point on, nobody's really growing right now. It's like really important to stay prioritized.
Thanks, Suzanne.
I mean, I think my call to action is being in the real estate building space, touching billions of square feet under management for large clients. It's let's put some of that innovative firepower and enthusiasm at buildings, because guess what? It's close to 40% of global carbon emissions for construction and operation, and it's solvable. It's solvable with deep retrofits, with existing technologies, right? And the biggest gap, one of the largest gaps, is that the different players that make up those buildings have different incentives. And it's a very simple opportunity to start bridging, being the tenant, being the large corporate who actually approaches your building owner, not just in one building, but in 12 buildings, and talks about the case for retrofitting that building and getting it aligned to net zero. You can have a massive impact on helping cities get to net zero, helping the built environment get to net zero, if you kind of use your corporate leadership and channel it in that direction. So if you have ideas, if you want to partner, please reach out. But that's my call to action.
Fantastic. Thanks so much. Letitia.
Yeah, mine's a little different, but I think the power of each of us working on an individual level to be thinking about how we're looking at our own financial portfolios. So be it within your own kind of financial investments and how you're leaning in and looking at and asking your advisors to integrate ESG into your investment portfolio, how you're potentially looking at impact or sustainability ETFs or mutual funds, lean in on those. Because the more demand we see, the more that our investors are actually going to pull those products together, the more they're going to ask and expect corporates to do this. And that pull then triggers, obviously, investment into your companies. But also ask your own treasurer. So at your corporates, ask your treasurer, what are they invested in for the 401k or pension funds? And ask them how they're thinking about sustainability or ESG integration in. The more demand our investors see, the more we're going to be looking for those products, right? And so it just is kind of that supply and demand. So keep asking for ESG and sustainability in your financial products.
Thanks so much. Michael, take us home. Final words.
My advice has changed over the years, but what I would say today to those who are listening is make best friends with your finance team. With your CFO, with your controller, with your treasurer, with your head of IR, with your head of FP&A, with your corp dev folks. Everybody on the finance team is much more engaged in sustainability than they ever have been before. Take advantage of that. Understand their language, understand what drives value for them, and it's going to help you tremendously in your role as driving sustainability in your company. So learn the language. I didn't know, now I know enough to be dangerous, as Letitia knows. I need more education on this. But boy, that little that I do know has helped us tremendously.
Thank you so much, Michael. Actually, a perfect segue to my closing remarks, which is we actually have a series of small roundtables coming up, including ones around influencing internal stakeholders, teams, executives. So very much if you're interested in that topic, please get in touch. We'd love to have you involved. To our distinguished panel, Letitia, Michael, Suzanne, Erin, thank you so much for your time, for your expertise, and for sharing so openly with us today. And for all of you watching and working on sustainability, thanks for your efforts and thanks for spending your time with us as well. We hope to be in touch. We hope to be in support of the work that you're doing. Thanks, everyone.
Thanks.
Thank you, Jason.